Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and US economy space. And as you guys can tell from today's title, a lot has been going on in the space. So we're going to go ahead and dive in. We'll be covering the collapse of some of those stablecoins. Are the bulls actually out to play? And what's going on with just the banks? So if you guys enjoyed today's video, go ahead and drop a like below and subscribe. That way you can stay up to date for all of my most recent content. But we're going to go ahead and jump into that CBBI to see where the confidence is with those markets collapsing. And as you can see, we have taken a hit. We're on the trend down to some newer lows. And it's starting to look a lot more like 2015 than what we first thought of 2019. As you can see here, we are having that steep decline. We've fallen about 5 confidence points. So maybe it's time to, increase your bag, or maybe it's time to just sit back and wait a little bit. But let's go ahead and pull up coin market cap just to get an overview, because you can see there is a lot of red. We still have Binance USD still in the top 10, but something tells me it's going to fall out soon with that burn. We have USDC still depegged and tethered depegged as well, but in a better way, and it actually did get all the way up to $1.03. So that's kind of what's going on with the overall markets. You can see Bitcoin, Ethereum down 10%, but we've had a nice pump the last 24 hours. So let's go ahead and jump into what's causing that. And as you can see here, the stablecoin USDC breaks its dollar peg after Silicon Valley Bank went under. So they had about $3.3 billion of their 60 or 40 billion locked up there, and that is essentially just, it's 1-to-1. So you can see they had $40 billion for the USDC reserves, and as you can see here, that's no longer true because they lost out on that $3.3 billion. And why is this kind of important to know? Because a lot of people, when they are trading Bitcoin or other cryptocurrencies, they take their profits and they put it into, Tether, USDC, some of these other stable coins. And whenever it gets depegged, people are caught off guard because they thought it's tied to the dollar no matter what. They're still learning their lesson after the algorithmic stablecoin collapse, after the collapse of Tether a little bit ago, and just all of their concerns with that, saying they don't have enough backing. Recently, they've fixed those claims, and Tether is looking better, because as you can see here with the most recent news, if we go to TradingView, and we just go to USDC dominance, it has dropped a full %. People are getting out as fast as can be, which unfortunately is a good thing for the people that are staying true, because what's most likely happening with USDC are, as some of these people are getting out and taking those 10-cent loss, 9-cent losses, I think that it's at right now, and they're going to burn those tokens to get it back to that 1-to-1 peg. So we're going to go ahead and see where they could be going, and as you've noticed, we've had a nice pump with Bitcoin, as we've shown, and you can see here it's pumped. But where is it really going? I've already kind of showed y'all. As you can see here, we've had Tether go up 1.5% and just market dominance. So it doesn't look like they're actually leaving the market, although there is some money that has left, and we'll show you the total market cap here in a second. But it does look like they are just moving it over into a different stablecoin. Now, be careful which one you choose, because with that being said, you can see here that other stablecoins are on the verge of depegging as well, with already I don't really know how you pronounce that. DAI, I know what it is, I just, I don't do words. I'm more of math finance, as y'all can tell. But they also went ahead and depegged, and this is another algorithmic stablecoin that is collateralized by, yes, you guessed it, USDC. So your collateral is backed by another stablecoin that's not pegged or not guaranteed to be pegged. It just wasn't wasn't looking good from the get-go. But you can see here that they had a market cap of 4.9 billion, and they are also currently burning some of their coins to try to get that peg back. So I don't think that this is too much of a concern. I think those banks collapsing is a concern because around the Twitter sphere we'll show you why that's a problem here in a bit. But for the crypto markets, yes, we do kind of have a little correlation with the stock market, and it has been changing a lot in the recent, I guess, recent, present, future kind of. We've kind of changed our beta to probably like zero point 0.3 or zero point 0.4 now, and I don't think we'll see this as much contagion from just the U.S. banks go into the crypto market. I think we already had that baked in. I think just with the SEC crackdowns, people saw it coming. So you can see that here just with Bitcoin still going up 4% in the last 24 hours. Y'all saw it in the coin market cap, which is why you should always start there. Bitcoin and Ethereum rose 4% in the last 24 hours after that steep fall due to the contagion of the Silicon Valley, the Silvergate Bank. And you see that they are sticking to the blue collar, just Ethereum, Bitcoin, the two that have $200 billion, or I guess that's not longer 200, but $100 billion in market cap. You see people really are only trusting those, and they're hesitant to still get into some of those altcoins. Altcoins have corrected around 20% due to this news, so it might be worth looking into some of those while you're still DCing into Bitcoin, but make sure you pick some good ones. And as you can see here, we'll be dropping some Copi news as well at the end of the video. But it's kind of interesting because with all of the recent news, you can see here we had a lot of liquidations, but ultimately it didn't push us down as far as you would think with about $150 million of liquidations. We only did actually fall. Oh, you can see Bitcoin's dominance did take a hit and it went up, but you can see Bitcoin really only fell during that. We gave support of 9%. So, if y'all remember when we had a lot of long liquidations, it was looking more of like a 20 to 30. And just now that we've fallen out of this range, it does kind of protect us from that head and shoulders that we were talking about. We filled that CME gap that we were talking about for a while now on this channel. So as you can see here, it's almost perfect. We went down, falling knife came and bounced and corrected up from the CME gap right when we filled it, kind of like we were paying attention to. So like I said, it's always important to look at these gaps. These are the only two current gaps that are in Bitcoin's futures. So there could be potentially one that happens this weekend with just the market volatility that's going on. So we will keep our eyes open for that to see if there is going to be one. If Bitcoin does fall down, that would imply that there most likely would be a gap there if it actually did broke the level of 19.5. So if it did break the 19.5 level, that would definitely show us another CME gap, but I don't think it will go ahead and get to that. So to go ahead and close out the video, we're going to go ahead and show around the Twitter sphere. So with all of the banking collapsing that's going on, it's not the same as what's happening with exchanges in the crypto space. So whenever a crypto exchange, collapses, there is no FDIC insurance. There is no recovery process. They file for, I think it's they file for bankruptcy, and then what happens is they just sell all the assets, and however much money they get out of that, 30%, 40% goes back to person. Now, how it works when it's FDIC, when it's actually registered as a bank, they have this insurance policy to where they can actually get some of the money back. So as you can see here, right when it went under, they got 62% of the money back and paid out. Then, and that was immediately. Then, if you fast forward a little bit, they ended up paying out 94% on the 11th. So it took about 5 years to get the other 32%, but it did come. Now, as you know, with Mt. Gox, they only got a fraction of that, and it's still going on and still being talked about and still being paid out. So I thought that was important to highlight because, yes, banks going under is a bad sign for just the economy in general. So be careful with the stock market and some of those assets. Like I said, I think we are decoupling and we're not correlating as much to the stock market, but there will definitely be some, bleeding in of all finance industries when something like this happens. So we're going to go ahead and jump to the second story, which is kind of a breaking off on this, and that is that the Fed is making an emergency on Monday. And they had a meeting literally this last week, so that is never a good sign. The U.S. economy is not looking good by any means with two of these banks collapsing. People are saying we haven't seen stuff like this since '07, right before the financial crisis. So just make sure your capital is safe and protected because we are in some unprecedented times. And then lastly, I want to go ahead and show y'all just some Copi updates because they did announce that their lock period investing schedule for their tokens has been lifted for the advisor tokens and just pretty much team members who work for it. And the biggest one is getting released this month. So you can see about 15,000 or 15 million Copi will be released. Now, I love this team. I'm very passionate about this team. I don't think they're going to go and sell all of these tokens. I think they truly are passionate about the project they're building. I think they may even use some of these tokens to buy land, so you could actually see, some of those NFTs of the land or, racers eventually, go up in their floor go up. So I think this could actually be a good thing. I don't think this is anything like a pump and dump because as you can see here, they have it on a schedule that goes all the way out to 2027. So it's only set 41, but I mean, it at least shows that they are planning for growth. As you can see, there's still millions of dollars that are going to be released in 2025, 2 years down the road. So I wanted to give you that update. I'm still, increasing my bags of Copi. I'm still DCing into some of these, dips. Like I've definitely bought on this dip, but that is on my own personal, strategies. So that's all I have for y'all today. If you guys enjoyed today's video, go ahead and drop a like below and subscribe. That way you can stay up to date with all of the news that goes on in the space. But stay safe out there. Bye-bye.